Good morning. It's Tuesday, July 22nd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So we're excited to announce an upcoming new research product, the Blue Line Crypto Edge. It's going to feature the tactical ranges of Bitcoin, Ethereum, and also Ripple. These are products that many of you are trading on the futures side with us over at Blue Line Futures. So we want to give you some additional support, as well as a detailed technical breakdown of these exchange-traded products. And if you're interested in a 2-week trial, please sign up in the link in the description below. Now, looking at the U.S. equities overnight, stock futures, they are muted after the S&P 500 and NASDAQ both closed at fresh record highs. We saw gold and silver. They are taking a bit of a breather after a classic stagflation trading day yesterday with a big decline in the U.S. dollar and also 10-year Treasury yields. That was about as easy of a setup as you can get here in the precious metals markets in recent times. Now, looking at a quick data check, we do have the S&P 500 and NASDAQ. They are slightly lower as of 5:25 a.m. Central Time, with the S&P 500 down about 7 points, the NASDAQ down about 56 points. We also have the Russell 2000 coming down 4 points at 2238. So we're kind of retesting some of the support levels that we've seen recently. Now, Goldman Sachs says the dip buyers are going to remain active and the CTAs will scoop up U.S. stocks this week, no matter what the market's direction here. The overall group is expected to buy about $107 billion worth of global stocks over the next month. So keep an eye on that. Keep that in the back of your mind here if you are a bear in the market, as a lot of these corrections have been shallow in nature, and it points to some of these large institutions buying here to fulfill their needs. Now, tariffs and the fate of Fed Chairman Jerome Powell are going to be the ongoing themes here, with Fed Chairman Jerome Powell delivering some opening marks here at the Fed's integrative review of the Capital Framework for Large Banks Conference, whatever that is here. There isn't any Q&A, and the Fed does remain in a blackout period until July 31st. So I anticipate all the financial news networks turning into it to listen to what he's going to say. However, the stock market, I believe there'll be very little reaction here. Now, taking a look at the outside markets here, we do have 10-year Treasury yields up about 1 point here at 438, which puts the 10-year note back at the 111 handle. Many of you are working the October 112, 115 call spreads, a position that we put on here a while back, looking to offload that position on any kind of sell-off in 10-year Treasury yields. Not a recommendation of the public, something that we've already established here quite a ways back here. Looking at outside markets, you do have crude oil futures down about 50 cents at 66.69. That's the August contract. However, you're going to want to look farther out here, as that August contract is up for expiration, and we do have first notice date. You want to look at things like September and October, as Mideast tensions are starting to rise a bit. But if you tend to go out too far out, like what we saw with the U.S. Israel-Iran conflict, as those front month futures surged up on those Middle East tensions, the back month futures here didn't gain as much, and the reason is because of the fact that they feel that the conflict will be short-lived, as many of these conflicts here have been just more tactical strikes rather than an ongoing escalation of a war. So we want to keep that in mind when we're doing our positioning here in different futures markets. You do have the volatility index hovering right around that 19 handle here. The dollar index just slightly lower here at 97.56. We saw a big boost up in the euro currency as a lot of traders looked at that dip here for the euro currency, with anticipations and an outlook here of about 120 to 121 by year end in the euro currency. We've been looking at the ranges here from about that 115 to 120 mark, and we anticipate the dollar index here, once it continues to stall out on this big bounce up here, as the Fed continues to cut rates and the deterioration comes into play and other alternative products offer Treasury type of plays, we should continue to see, in my opinion, the dollar index continue to sell off, and it'll be a big boost up here for inflation and general commodities. So looking at some other things here in the precious metals market, something that we outline in the chart pack is that silver, it is approaching, although taking a small breather here today, down about 20 cents. Front month futures at about 39.11, December futures 39.61. The December contract 39.80 was the high overnight, 39.53 being the low, and the last year 39.59. The September contract holding that 39 level here, and you can see that silver here, it is approaching that $40 after successfully holding some of the support levels that we outlined in the chart pack. Meanwhile, gold is broken above the resistance at 33.65 and continue to rise. Now it surpassed that 33.89 and reached the resistance range of 34.05 to 34.10, and that was a strategy that we also outlined in the chart back over the past couple weeks. So if you get that, start to look back at the last previous days, and you'll see that we outlined if we do get that breakthrough through 33.89, we believe that it'll be a gravitational pull as stop losses should be triggered and volume should surge on that breakout up to that next level here where we saw a lot of active volume in the profile on the charts. Now gold may be headed for another breakout with macroeconomic drivers and geopolitical uncertainties lending to support. Crude oil has had little or no reaction to the rising Middle East tensions. Momentum is building, and the two levels of resistance we want to watch in the gold market, 34.15 and then 34.39, where a breakout through these levels could open up the door for another run up to 34.95. That's seen as our tactical resistance level 3 in the report if you do get the Metals Edge report. Now in crypto, many of you started adding August Bitcoin on the dip here that we've seen while working orders in July. That's a method that we've been using to try and time the roll. Does it work every time? No, it does not. But we anticipate with the futures contracts continuing to have the upward momentum, we do have the potential and opportunity to unload some of those July contracts as we're breaking through that 119,000 mark as of this recording right now. Now we are also looking at adding Ethereum on a dip, and Ethereum ETFs, they are driving on to record high volumes. Now looking at the ETF flows here, gold, they did add 197,000 troy ounces of gold holdings, and total gold held by ETFs did rise to 9.5%. So that was up to 91 million ounces, the highest level since August 8th, and gold's up about 29% year to date. We did tack on about 1.4% yesterday's trading session. We saw platinum holdings, they decreased to about 67,000 troy ounces yesterday, and that was the most since August 8th. I suspect that 1500 level with platinum futures down at 1479, retesting the 1500 level, I do anticipate that level is a psychological level that will support some profit taking place. So you do have the gold silver ratio at 86-1. And if there's anything you need here, again, if you'd like to sign up here for that crypto product, please use the link in the description below and fill out our general inquiry, and we'll start to send that out to you. And if you have any questions on futures or options trading, you want to know about some of the levels we're adding on, some of the positions that we're starting to take, or some of the things that we had put on just recently with many of our clients, shoot an email to info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.